Alright, what's up, traders? I am learning how to do some screen recording right now, and I'm gonna be doing a little review on the 10-year bonds, SPX, and Dow Jones. You know what I mean? Most of my trading I've been trading for almost 4 years, going for my 5 years, and most of these things is psychology. You know what I mean? Most of these things are about learning how to remember and see and be able to react with no emotion. You know what I mean? Knowing that this is just a game, you win, you lose, and that's how it is. There's nothing in buts or so. It's just how you take it. And you have to be able to learn how to control those emotions. You have to be able to control that greed. You have to be able to understand these things. You know what I mean? It takes time, takes years to be, I think, get good at it. So the faster you start learning, the better. You know what I mean? You start seeing, analyzing what's happening around the world, and it starts matching up with the stock market. You know what I mean? Sometimes, like I say, if you follow me, make sure you guys follow me, and I'm gonna be teaching you guys what I learned and my psychology with trading. So as right now, I have my U.S. 10-year government bonds. All right, and as we can see here, this is my MACD. I only like to use my MACD, my 9 EMA, my volume, and my 65 EMA, and my Ichimoku cloud. This one's one of my favorites. It's all the things that I use in order to analyze and get better at my trading and make decisions. Because it's all about decisions. You cannot control what happens. It's just decisions. So let's see. I also have learned a little bit from ICT and ICT learning the fair value gaps, buy slides, sell slides. You know what I mean? I've seen so many other ways how traders trade in order to kind of get another idea or concept. So let's go back to the 10-year bonds. We have seen the bonds going up. Everybody's trying to demand. Everybody thinks US is more stable to put their money there. So I don't like to go below my 1 hour chart unless I see that there's gonna be a possible move on the bigger time frames. So today is January 28th. The month is almost over. And let's delete this one because this one looks much beautiful, much better. We can kind of clearly see what has happened in the last days since we saw this drop since October 24 right here. In October 24, we saw this candlestick, meaning buyers and sellers were having trouble to buy, but the 9 EMA was already getting weak. As you can see, it was very weak right here, very weak. It broke below this one, very weak. 1, 2, 3, 4, 5. The 5 moves, the 5 waves. This is the 5 waves. So 5 moves happened all the way to October 24. After that, buyers started getting tired. As you can see, buyers were trying to push, sellers were jumping in, buyers starting to get weak, sellers were above the buyers right here. There was more sellers. People started getting rid of their positions. As you can see, buyers in this candlestick were very weak, so not a lot of buyers. People got rid of the thing, so people just rookie traders bought, sell, boom, started coming back down. Market was resetting. There was not enough buyers. There was not enough buyers in this area. Buyers try to push. Sellers were able to hold this, push back down. 65 EMA was holding still strong, but not as strong. And Wednesday, November 20, 20 November 8th, 2023, 2 months ago. Buyers were not enough here. They tried to buy, they tried to purchase, they couldn't. Sellers push, buyers couldn't hold that. They came back down. Market was resetting. There's buyers starting to enter here in this market. There's buyers right here in this area. There's buyers. We know that this area has buyers in our 10-year bonds. We have buyers at 462, 462. At 4.60, we have buyers. Right here, we have buyers. You can see it try to break the 90 MA. They were trying to be above. There's buyers stuck here. There's buyers stuck here. Buyers right in this area. Market was resetting. Buyers were still not winning. Sellers were still pushing. Sellers push, push, push. The wicks are very small. Remember, you have to always pay attention to the wicks. You know what I mean? Always pay attention. Wait, wait, wait for those big long wicks. When they're very small, they're still not very strong. Now here, still buyers are not very strong here. Sellers got down here. Buyer was not as strong. People start selling more positions. People try to sell here. Market is reset. Right here, there's a reset. This is a balance point. There's no buyers nor sellers are in control here. So the market is looking for what? Liquidity. Still looking for more. People are holding. People are like, no, you know what? I'm just gonna hold. So the market is starting to see the value going up. Now market is in an equilibrium point. Market is in an equilibrium point. Remember, everything is psychology. Everything you have to match. Everything has to match within the thing. So now the news have to match. Emotion has to match. Everything has to have a reason why it's happening. So we also have tensions. We have seen a lot of news about countries being mad at the United States. We have seen the border crisis. We have seen tensions in Taiwan, tensions in China. We have seen also we're waiting for the job report. So all those things are gonna affect the government bonds. All right. So the more remember what it is helps is in order to control inflation. We also saw inflation rise from last quarter from December to I think 3.3. So that can also make that maybe the government might try to increase rates again because we still have inflation in the market. So that news, that news, which was Thursday, no, this news was on Wednesday. You can see Wednesday came up, buyers were able to hold, they went back up to this equilibrium point because we're still waiting to see how we're gonna control inflation. And as you can see, also we have income taxes around the corner. We have people still buying. We still have summer coming soon. We have elections. So there's a lot of stimulation in the economy. Excuse me, sorry. So sellers were in control. They lost control. They went back to an equilibrium point. Nor buyers nor sellers are fighting. You can see they're here, they're fighting. So now let's go to the weekly chart. So in our weekly chart also shows that sellers are losing control at this equilibrium point. They're losing control. So what can possibly happen? It already broke. That means that there's weakness, but the 65 still holding. So there's gonna be buyers in this area. So there's gonna be a lot of sideways moving on here. We have to be very careful here. There's stop losses right up here. We're waiting people to come and reset right here before they tanks down. We have to wait for that reset. So there's buyers in the market. We know that there's buyers, losers. The bears are losing here, so we know that there's buyers in the market. Buyers are trying to get into this market in this equilibrium point. So there's buyers are trying to get into here. All right. So we have to be very, very careful with that. So now big interest rates can slow the economy down. You know what I mean? They keep increasing rates. That means the stock can keep coming down. So let's go now. Let's go compare it. Let's go to the DXY or let's go to the SPX. Let me see XPX. All right, so we already saw the U.S. government the U.S. government 10-year bond. It is bullish. Over here, we know that we have buyers in the market. We still have a lot of buyers in the market. We still have buyers in the market. So remember how many waves have it count? It has broken the 65 EMA and the 2 EMA one time, two times, three times, four times. So there's one more time that has to break. Once it breaks this one more time, we know it's gonna come down. I like to five times. It looks very good. So now we have here bullish the 90 MA. We have one breakdown, two breakdowns, three breakdowns. We have to see another breakdown here. Market is resetting. Sellers were trying to control. Buyers were trying to control. Sellers, people sold positions here. So we know that there's sellers here. So market comes here to 47, 48. We know that people are gonna try to tank this. People are gonna try, those traders are gonna sell positions. So we have to be very careful. Sorry if you see this mess. Let me erase this. This is my daily. Here, buyers were able to control. Buyers were able to control back again, right above this area, and they're still pushing. Sellers are trying to push down, but there's strong buyers in this area. You can see there's a lot of buyers in this area. And plus, we're still above the 65 EMA. That's why we look to our Ishimoku. So, buyers are still in the market. Buyers in the market, buyers in the market, buyers in the market. It's going to start moving sideways. Because we still have buyers, 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 but it's overbought. We still have strong buyers, but it's overbought. There's one positive buyer, two positive buyers, three positive buyers, four positive buyers, four positive buyers, and the market is still going up. So till what high can we be going up still? So that means here this chart SPX is showing us, and based on my analysis, is that we still are going up. So if the market still keeps going up, that means that soon SPX. Oh, now let's go to the Dow Jones. Sorry, you see a little mess here. Um, Let me erase few of these ones. Hopefully you guys can see. As you can see, I was in this trade. Look, went back up. Boom. Take profit right here. You saw that? So now market has overextended. Sellers, people were selling positions right here. People already got tired. People, look, as you can see, look, people one, two. There's only two breaks here. One, two, and 65 still holding. So some people sold positions here. People sold and some other bought. People sold and some people are buying. People are still buying. It's an equilibrium point balance. Buyers are still in the market. Long term, they're holding. They know it's gonna keep going up. So there's two charts showing us positiveness. All right, showing us that it's going up, that the buyers are still strong, holding strong, and sellers are losing. Sellers are losing. Nobody's selling. Everybody's holding this right in this area. Right above this, people are buying and selling above 37,290. So we know that if it comes here, people are gonna try to buy again. So if price decides to come back down, remember we have to see a support on our 65 in order to continue this. The 90 MA has shown weakness here at this level. There's weakness here, but we have to see this as support. The support is right here. So price can come back down, try to bounce it up, and if the 65 EMA can catch up, if not, it will come back down and try to catch some buyers here and try to bounce back up. But as of right now, we are seeing that our 90 EMA is getting weak. So now let's go to our DXY. I like to use all those in correlation. So okay, so now sorry you cannot see this or you're a little bit confused. The market created this nice bullish flag. Now it's trying to create another bullish flag. Market is above the equilibrium point. Equilibrium point. All right, this is an equilibrium point. Buyers are not able to hold right above it. The sellers are trying to get pushed down, pushed down, pushed down. As you can see the DXY, I mean SPX look bullish. DX SPX looks bullish, and our 10-year bond looks bullish. So that means that there's a possibility that later down the road, the 10-year bonds or the interest rates are going to increase. So that means that the interest rates are possible going to increase in the future. So as right now in the future it can increase and come back to 105. But as of right now the sellers are willing. DXY, I mean the Dow Jones is showing us that there is weakness. SPX is still showing us that is overbought, and we see the 10-year bonds showing us that they are bullish. So what is that can show us signs that we might have a sellout coming soon. We have to just patiently wait. Right now, buyers and sellers are fighting. We're entering a new month. We still have inflation in the market, like I said. So the Fed has to make a decision, an interest rate decision. So that move is gonna happen when the next rate interest rate decision happens. So right now the market is very, very, very sideways. So this is my review for all this all these charts. I hopefully you guys like it and hopefully you guys like my ideas, and I'm gonna be posting videos every often as much as I can. I'm creating a page for you guys to follow me more personally, and you guys want to be part of the Money Association and want to get alerts and trades. I'll be showing you guys what I think I'll be investing. I'll be doing more searching, more investigation, more analysis, and I'll be posting them on my YouTube. So let's get it. We're gonna see what happens this week. I posted a live video on GBPJPY, and I'm gonna be looking and analyzing more videos or more charts of possible movements in the economy because we're trying to make those millions. Let's get it. The Money Association.